Big banks are about to absolutely destroy non-bank lenders, a very specific type of lender that's out there, and many people do not realize it. Some of these lenders appear to be brokers, like they're doing business with big banks, but they're absolutely massive. They have been loaning out a ton of money into the real estate market. And to describe what a non-bank lender is, these are lenders that lend money primarily in the mortgage industry for real estate that are not part of the traditional banking system. Traditional meaning they roll underneath the rules of the Federal Reserve, or they are a credit union that is governed by a body that governs credit unions. They have different access to money. These lenders look for wholesale money and then they go and loan them out to their network of people. To give you an idea, the largest, it's a very famous name, the largest non-bank lender out there is Rocket Mortgage. And to give you an idea, the scope of how much they loaned out, it says here in 2022, they originated 464,000 mortgages worth $127 billion. Now, can you say Evergrande? Evergrande in China. Check this out. How much debt does Evergrande have? Now, I'm about to show you something. So as of 2024, they had $300 billion in debt and $240 billion in assets. Rocket Mortgage is one company that has been loaning out money on mortgages, and these non-traditional lenders, they have very lax rules. If you remember, I did a story about 8 months ago showing the stress on the mortgage industry and how Rocket Mortgage was leading the charge, saying, you know what, you don't need to put down 3%. You don't even need to put down 2%. We're going to take you if you put down 1%, and we're going to lax the standards even more. We're going to relax them. All right. So Rocket Mortgage has been exploding in growth since the pandemic. It was already massive before that. But this is where it gets dirty, and this is where it gets really dangerous. You see, people that don't have mortgages with traditional lenders, they don't have the access to the bailout funds. Well, let me describe this because you're not technically being bailed out, but if the bank that holds your mortgage is getting a bailout, they're less likely to come take your house. Why? Because the federal government always rolls in and says, you're not going to foreclose on those people right away. What we're going to do is we're going to give you hush money or put a big old Band-Aid of, $100 million and put a big Band-Aid over your balance sheet. They say this is the big banks. I'm trying to describe this really light. So then the bank's like, okay, we've got all these funds from the government. They're hooking us up. They're taking the really bad debt off of our books, and they're going to try and package those up and sell them into some pension fund. So, okay, the government said we're not allowed to foreclose on everyone. Exactly like what happened back in 2000 or when the world shut down, let's say. So if you have a mortgage with a company that doesn't have the backing of the Federal Reserve through the backing of the government, what's going to happen is when you're hurting, they don't have a bailout and you can't make your mortgage, they're going to come take your house, and they're going to come aggressively. They're going to file every document they can. This is akin to what happened with student loans, where a lot of students didn't realize, I don't have a government-backed student loan, and all these people are getting bailouts, or they're getting, dustings from the current administration of, you're going to get some of your loans paid off. They go, well, why isn't my loan getting paid off? Why am I not eligible? It's because you went through a private company. You sourced a better deal or something like that. We didn't have that type of insurance, the insurance of the federal government. Okay, so this is about to happen in the mortgage industry. And I've got a story for you, and they're already setting this up to show you what they're about to do, because these big banks are going to swallow up the assets of these non-bank lenders. They're going to grab them and they're going to service them, because I believe that the federal government is going to step in as this thing collapses even more, and they say, hey, you know what? You're the bad person. We've already used our communist news network. That's what I'm going to be reading from, the CNN. We're going to decipher the behind the scenes. They're laying the groundwork. The media is already laying the groundwork. You'll see more and more rumblings about this in the coming months. Why? Because I said by June is when the floodgates start to open, and you see the foreclosure numbers pop. They're just going to pop. It's not going to be, I bet you they go up by 50%, 100%. Based on current numbers, which compared to 2019 are very low. I know that sounds crazy. The economy was collapsing in 2019. Interbank lending rate spiked to over 12%. To give you some scope of how big that is, show you the scope of that. During 9/11, the week of 9/11, and during the week of Lehman Brothers collapsing, the interbank lending rate went up like 6.2 and 6.6% respectively. Okay, so in 2019, to see the interbank lending rate spike to 12%, especially with fears of what was going on in China, there's so many things wrong. Foreclosures were massive in 2019. Most people don't understand that because it wasn't in the news. It was in obscure real estate quarterly magazines because they didn't want it to get out. Then honestly, was it 6 weeks after that? COVID started. It's weird. So we're going to see these foreclosures pop because of the Dodd Frank Act, which now severely limits the amount of time, or not, it severely handcuffs the banks of when they can foreclose on homes. Okay, it spans out the time farther. And then what happens is the government tries to play catch up and monetize the debt. Every 7 to 10 years, banks go through these cycles of a large foreclosure cycle, okay? So what's going to happen is the war drums are already beating, and the media is going to want to start to attack these non-bank lenders like Rocket Mortgage, okay? So check out this story. CNN says mortgage companies could intensify the next recession, U.S. officials warn. Says U.S. officials worry the next recession could be intensified by a cascading series of failures in the mortgage industry caused by crashing home prices, frozen financial markets, and soaring delinquencies. The cool thing is that you and I have known about this for years. I've explained it numerous times, these cycles. I've warned about this coming stock market crash. And it's funny because there are a certain percentage of human beings that physically can't hear. They can't listen. The difference between hearing and listening: hearing, you can hear audible sounds. Listening, you're taking in the information that comes in, you're processing it, and then you can actually relate it. You can speak it out. But there's actually a lot of people that just hear things. Like they go, Ninja, you've been talking about the stock market crash in 2022, 2023. You're right. I've said there's a day this thing's coming. I have no freaking clue, but it's a cycle. And if you're not prepared for it, it comes at the worst moment because the masses aren't ready for it, right? That means any collapse happens because the masses figure it out or the masses are affected. And so what happens is that means that the masses aren't listening, right? And that's where you and I come in, and we go scrape up everything else, pennies on the dollar, because they can't afford anything. All right. So now this is what the pros are saying right now. They're telling you everything that you and I both know. It says that they're expecting crashing home prices. That's their words, not mine. Frozen financial markets, liquidity, right? Or soaring delinquencies. It says the U.S. Financial Stability Oversight Council, a SWAT team of financial regulators. I bet you that's pretty sweet. They got tactical pen holders. Formed after the 2008 crisis, sounded the alarm on Friday about an increasingly influential corner of the industry that has largely escaped scrutiny. This is non-bank mortgage companies. Unlike traditional bank, non-bank mortgage companies are heavily exposed to the swings in the mortgage market, depend on funding that can drive up during times of stress and don't have stable deposits to rely on the safety net. And unlike banks, these companies are lightly regulated at the national level. The FOSC, the SWAT team of bankers, it's warned that these unique vulnerabilities risk a domino effect in the future crisis where multiple mortgage companies fail, borrowers are locked out of the mortgage market, and the federal government is left holding the bag. So it says federal regulators are calling for states and Congress to take action to address the risks posed here, including creating an industry-funded backstop to ease turmoil caused when a mortgage company goes under. Let me explain what that is. A backstop is not intended to help out the company like Rocket Mortgage. A backstop is you get a couple banks together, let's say Wells Fargo, JP Morgan Chase, and you say, okay, here's the deal. Rocket Mortgage is going under. You guys want those assets. Simply put, right? You want the assets. We're not, and this is what's really scary. There's a certain segment of the population that actually believes during this next crisis, because it's going to be a massive one, right? It's going to be like Great Depression style. It'll be much shorter than the Great Depression of the 30s, but it will be that level. We're talking, I'm not joking. There will be a day where you're going to see high, 20% unemployment. I know that sounds crazy, but you're going to see these crazy things happen. And there are a lot of people that believe in this debt jubilee. Oh, the banks are just going to give you back your house. There you go. We screwed up. No, that's not how it works. It is impossible for that to happen. They could give you a haircut like they're doing on student debt. Like, hey, you know what? We'll just knock off 10%. But the problem is by the time they do that, the damage has already been done, right? So that's just to stimulate the economy. Crash already happened. Stimulating an economy never happens before a crash. Most people have no concept of this. Yet they sit around and go, no, the bank's just going to give me my house. I actually physically know people that think this. They're Looney Tunes. Because in a world where a government has the ability to print money to oblivion, and with the Federal Reserve, they could take those assets, pull them off balance. Well, it's on the balance sheet, but they pull them aside and they never move them. So there's no liquidity, no money moving around. It just stays in a vault somewhere, these assets. They could actually stave off hyperinflation, right? Well, here's the problem. The big banks, they go, we're going to build a backstop. You're going to go take over those loans. So you're not getting your house paid off. You're not. End of story. And so the other thing is this crisis only comes when a certain group of people stop paying their mortgage. And here's the other thing. It's not that that group of people stop paying their mortgage forever. They just go, I'm done. I'm not going to get kicked out, because most people understand that. Say, hey, this is the one thing that happens. If everyone's starting to do it, and I knew people that did this, they were so freaking stupid. Now, I'm telling you, coworkers of mine, they just said, well, why should I pay for my house payment back in 2008? I mean, no one else is paying it because they're seeing it in the news, right? And they're not getting kicked out, and it's not worth what I paid for it, so I'm just going to stop paying it. Well, it destroyed their credit. They got out of the game, and it took them like 8 years to recover and get a new house, right? And so a lot of people think that these banks are just going to roll over and give you their house. They're not going to do that. What's going to happen is the Fed goes to these stronger banks, because the handful of six, Bank of America, Wells Fargo, JP Morgan, there's others. They go, we want you to get bigger and stronger and more powerful. So what we're going to do is you're just going to get to take those dang houses. You get to take them. You get to take the mortgage, and you own the mortgage, and then you get to service the loan. And in a lot of cases, you're going to force them to put their deposits in your bank anyway, so you're going to gain depositors, and then you're going to control it. And we're just going to go tell the CEOs of mortgage company, Rocket Mortgage, get out of here. Here's $1 million bonus for keeping your mouth shut. Sign this NDA and get out of here. Good job getting us this book of homes. And this is where too big to fail came to be. Does this make sense to everybody? Let me know if it does. Say it does. Because I want people to understand the game. This is why it's so important when we're looking at these events that are taking place currently and they're building up. It gives you more reaffirming sort of this notion inside to go, yeah, I'm gonna keep my credit score solid. I'm gonna get low on debt. This is the long game. Wealthy people did not become billionaires just playing the short game. That's never how it makes money. And I'm going to wait, because for a certain period of time, this doesn't happen overnight. Rocket Mortgage is trying to negotiate with its people. It's trying to, I mean, obviously the market's imploding, and we're already seeing that. We're already seeing inventory increase. Days on market are increasing. Price adjustments. I don't know any market in the country right now that doesn't have, it doesn't take a price decrease of at least 5% to move that thing once it hits 30 days on market. Because there's a lot of real estate agents that are going, oh, inventory's light, let's price this high. And it's a trick that a lot of real estate agents do. They sit there and they go, oh, your house is worth X. And you go, yeah, that's what I wanted to hear. That's just to get you in. They know more than likely we're going to have to hit a price adjustment in 30 days. You're going to have to see the seller concede to something in 30 days or 40 days because they're going to get freaked out. But hey, it got the listing. And that's the thing. That's where I'm showing you right now. CNN is already working this, and it says right here, as of 2022, non-bank mortgage companies originated. Think about this. Oh, please understand how big of a deal this is. In 2022, non-bank mortgage companies originated about 2/3 of U.S. mortgages and owned the servicing rights on 54% of the mortgage balances, according to FSOC. That's up significantly from 2008. So now what does that mean? First off, not every loan or mortgage that a non-bank originates, they keep. They can sell it if it falls in the guidelines, within the guidelines of Fannie and Freddie Mac, right? They can sell it to Fannie and Freddie. Problem is, Freddie Mac right now is actually investigating a lot of these non-bank lenders for selling them things and falsifying information. You can't make this up, all right? This is why I'm diving into mortgages right now and tearing them apart and showing people how they can save a lot of money, because this is scary times. And you don't want to dive in with just any lender. But that 54% of servicing, understand this, if their book of loans get too far out of whack as far as their the amount of homes that they are in distress, they're slow paying or they're not paying at all, what happens is they can lose the rights to that servicing. So that means the federal government walks in and goes, hey, you screwed up your book of loans. You loaned to a bunch of people you shouldn't have. And so you know what we're going to do? We're going to take away your rights to service. And that means they go give it to a big bank. They go hand the mortgage servicing off to a big bank. And then there's some kind of negotiation of what they're going to do with those assets. So this is a very big deal. The cool thing is check this out. And I do this for the algorithm, but I also do it because I want to hear I want to get the pulse of who's listening. Type 1 if you know this is a big deal. If you know it's a big deal, you also know most of the people around you have no concept. They don't care about this. And yes, somebody's asking, is a non-bank lender a private lender? Absolutely. Now, there's different designations for private lending and things like that. But what I mean is they're not a bank. They're a corporation that started borrowing money on the wholesale window and loaning it out to people. They're not sitting there usually they're not tapped into the Fed funds. Well, they can be, because I actually applied for that too. I was going to go down that road and open up a lending institution in 2017. One day I will own a bank, but not now. I know it sounds crazy, but I want to be a lender and not a borrower. I hope you got something out of this. I appreciate you guys. I'm going to go and make some more videos, but I just wanted to give you sort of a brief overview of what's going on. CNN's already starting it. CNN is the mouthpiece for the banks and for the government, and they start these low rumbling stories. You're going to start seeing more and more of them, and I'll start showing you as they pick up and as they intensify. That's the war drums beating of this next collapse. And again, remember, you're in a severe inflationary collapse right now, which means you're going to continue to see the stock market go up until it does. It's going to keep going up because people are chasing yield. Okay, that's why we had a banking crisis larger than 2008 last year. And I know it sounds crazy because you're like, what? Nothing's collapsing. The government is printing trillions and trillions of dollars now per year just to keep this hidden until they throw a tantrum. That tantrum, I believe, comes when the next president is elected. They're going to pull the plug. And I know it sounds crazy because most people don't understand this either. Why would they pull the plug? Their money's going to go down. Yeah, it doesn't matter because they have the purse strings. They can borrow as much money as they want. If their assets go down in value, wealthy people, they don't sell them. They go buy more. Okay? So we all have to get out of poverty thinking, stop thinking like poor people, and we got to think like rich people. Rich people buy when assets go on sale. Retail people, they run and cry. Okay? So we are building an army, you and I, seriously, I'm not joking, of retail investors becoming powerful, wealthy investors. End of story. We keep our composure, we keep our cool, and that is what makes winners. Hope you got something out of this. The Economic Ninja is out.